Is Bitcoin predicting the future? I'm just joking when I say that, but I do have an interesting chart and some important things to go over today. You're watching the Daily Stock Market Brief. My name is Michael Silva. This is the show that we do Monday through Friday, 5 days a week. We use technical analysis and intermarket analysis to get a good idea as to where the stock market might be headed next. Today's show, it's going to be more compact. We're going to be flying through these charts. I did post a video earlier today where I went into detail about gold and what I've been noticing around both the nominal and the real rates. So take a look at that if you have the time to do so. Let's get into today's show. All right, welcome back. So we had a red day. What do you know? Pretty much red across the board here, other than clearly the VIX. What was taking the top spot? Real estate and healthcare seem to be doing fine. At the bottom of the list, you can see technology and consumer discretionary. Not much really going on from a technical standpoint. Like, this is a very minor down day for the most part. We haven't had one, so it's probably very foreign to everybody. They're like, what's going on? Is the world falling? Like I said in the last market brief that I did on Friday, I went to cash positions because the market was very overextended. Now, I'm going to be telling you where my kind of head is at in the conclusion section of this video and how I'm going to be approaching the markets here. But let's go ahead and just hop right into the charts. The first one I want to show is the one that was on the thumbnail. And this is where we're just comparing the SPY to Bitcoin. Now, keep in mind, this is by no means something that, is 100% certain, works all the time. I looked back through history and it's pretty accurate, but it's not like 100% by any means. But as of recently, you can see here, if I don't have the ability to shift Bitcoin forward here, unfortunately, so I just drew these lines, and you can see they're slightly diagonal here. You can see from the left to the right here. But what I wanted to call out is, these dips here in Bitcoin, right here, here, and here that's taking place. It's very interesting to me because it's about a 3 to 5 day lag in most cases in these last pullbacks from the start of 2021, where the SPY then rolls over. So, I'm joking when I said this on Twitter. If you don't follow me there, you can follow me there. But I said, is this what they mean by Bitcoin is the future? Is it predicting the future? And you can see here, right, in 2021, we had that pullback, right? And this is obviously a bigger pullback than we saw on the SPY, but it was a pullback. And then shortly thereafter, about 4 to 5 days, the SPY then saw some weakness, and then it pulled back up, right? Well, very shortly thereafter, we also saw Bitcoin pull down again. You can see here a few days after, 3 to 5 days, then we saw the SPY roll over. Now, I point this out because I do find it to be somewhat important because Bitcoin had this, mini crash episode that took place. And there's all kinds of narratives around it, right? A big whale from China sold 9,000 Bitcoins. There was there's a bunch of different news around it, and we're trying to find, a rational or a reason, for what is taking place. And all those might be very true and correct narratives. But we need to just be aware that, okay, if this little, 4 to 5 day lag is actually accurate, and we're still here in oversold territories in the SPY. If you watch my last week's market brief, I went into detail as to why, I felt more comfortable in a cash position for right now. It doesn't mean that I'm not trading intraday, but there's just I went over my reasoning there. We do see the increased volume coming into the SPY right here, and we had just a very tiny little down day, but Bitcoin has taken a significant hit for the most part. So is that telling us that, okay, maybe we might see the SPY roll over here, in the next 3 to 4 days and see a little bit of a down pull and, find its legs and then head it even higher? I don't know, but it's something worth noting and something to point out. Now we're going to just hop through the indices really quick. Now, clearly, no structural damage has been done on a daily time frame by any means right now. The 5-day moving average, the 5 EMA, is still intact. We are overextended still, but there's nothing that has been broken. And then the 20 sloping up, 50 sloping up, and then I added the 100-day moving average because a full correction on this little broadening wedge pattern right here, they'd find a lot of support right around 3,900. So this zone in here could be something to really look for if we do get a pullback. Like I said, I'm going to be pretty aggressive in my individual trades that I said on the previous market brief, but I need to see some sort of pullback of some sort to kind of have these charts reset a little bit to feel more confident going long. Now, you probably have noticed that I haven't been posting much charts, and the reason for that is simply because I haven't really found quality setups. And if I'm having trouble finding quality setups, that means that we are at this kind of time frame here in the markets where, where it's not presenting us with all kinds of opportunity, which typically ends up leading to some sort of a pullback or some sort of pause or consolidation. Okay, so that's the S&P 500. On the 30-minute time frame, you can actually see a very similar type pattern that you see on the daily, but also on the 30-minute time frame. And, it's just a bull channel right here. We have a gap above us now. We have gaps below us. If we break down, I'd start targeting that 406 to 408 area to find some support. If we have a full correction, it'd probably be right around 402 here from a breakdown of this pattern. Let's look at the Dow Jones Industrials 5-day EMA, still holding strong, still in bullish context. All the rivers are flowing up. Everything looks good right here as of this particular point in time. Now, the transports, I'm bringing this up because this looks a little bit different. And it's important to look at industrials and the transports. Okay, if you're familiar with Dow theory, cool. If you're not, well, we're going over kind of that right now, and they gotta move hand in hand. So transports did crack through their 5-day EMA. Industrials did not. Is transports trying to tell us, hey, if we head lower, you'll probably see industrials head lower too as well? Hey, it's very possible, but both charts are very, very bullish still. Very, very bullish at this particular point in time. So it's going to take a lot of work for the bears to break this type of just river just flowing just so bullishly right there. The IWM has been just this consolidation period sideways. Nothing has been quite broken as of yet. We are below the 5 EMA. We are below the 50 period moving average, and we're sitting there right at the 20. Okay, so those are kind of leveling out right now. This could be a distribution phase where we do end up seeing a decline, but keep in mind, just the context is still very bullish. So we got to look at like around 220. A breakdown close below that can head us to 210 very quickly. But if we start breaking out of this, I mean, we can go tack all-time highs in a very, very short period of time. So you got to be prepared, to go long here, or you need to be prepared to cover your positions or get stopped out if you are long currently right here, just by looking at this specific chart. Now, look at the Qs. Qs had this little hanging man candle. That was the candle that kind of really shook me out of a lot of positions. A lot of gaps that push us up, right? This is following the seasonality script that we talked about. Seasonality in April starts off with a bang. Typically mid-April, you see somewhat of a pullback, or even to early May. And you can see we saw the weakness today. We did close below the 5 EMA, but still no structural damage has really taken place at this particular point in time. Still in very bullish context, so you just need to be cautious. But just keep in mind, it doesn't mean go short this, because you can get lucky, right? You can get lucky shorting the market, right? Today you would have gotten lucky shorting the market, but we have is it VIX futures rollover, I think, this week? And then we also have, obviously, the VIX Crush Friday every Friday. So there's still a strong possibility that, the VIX gets crushed still, and we continue to head higher, not only on the Qs, but on the S&P 500. Now, here's the semiconductors. This is interesting development. Semiconductors, just like I said about transports is important to industrials, the semiconductors is very important to the NASDAQ, and semiconductors took a pretty large blow to the chin today, down almost 3%, so 2.63%. They did close below the 5 EMA. They did break through this consolidation pattern, but they did manage to hold on the 20-period moving average. You can see the uptick in volume. That's a lot of volume coming in. So maybe perhaps this starts to come fill a little bit more gaps here that it created in this run up here in April. But still, structurally speaking, this could be a perfect opportunity to potentially buy the dip. I'd be looking more at the 50-day moving average, or even the 100-day moving average. Now that I have this up and it's acted as support before, if it can get down there, that could present a good opportunity to go long. Because like I said, I don't think that this is the top of the market by any means. I think that with this loose monetary policy taking place, I still think we have some legs to go higher, and we can see, even higher highs to this whole blow off top scenario that's kind of taking place. Now, I could be wrong, but you need to at least be prepared for if that was the case, and that's what I kind of want to do. So let's go into some indicators really quick. I'm going to start off with the VIX. The VIX, extremely bullish breakout to start the day, but you can see it really quickly got crushed, has a little bit of an inverted hammer candle, which tells me, okay, we might go sideways or kind of drift a little bit lower. The gap above us is still there. It is still present. So that still remains a risk to go get filled. Now on the 15-minute time frame and some other time frames, you can see even more gaps that are still above us. The Bollinger Bands are still heading lower, which is not the most bearish sign, to be quite honest. That means it will have some resistance up here. So we might see these little quick moves here and there as far as the S&P 500 going down. I'll talk more about in the conclusion kind of my projections of what I would expect. Now let's look at the BP charts. I like to use these charts to really get an idea as to know if things are oversold, if things are overbought, so I can add conviction or just more confidence into certain trades that I take. And right now, we're not quite overbought. We're right about there, 68.64, so we're not in that overbought territory, but we have a little bit of an extended reading here on the BP NDX, so this might get reset and head down lower if obviously the NDX heads lower. Overbought can stay overbought for a long time, so this isn't the greatest opportunity in my eyes to be going long at this specific area. And that's just based off of, one, the technicals, and then also the internals here as well. BP SPX, same thing. This is actually overbought, so this tells me, okay, just keep hitting the brakes a little bit here. I talk more in detail on my previous market brief if you want to go do that, because it is still valid. Looking at this chart from a breadth perspective, minus 1.8, so nothing too dramatic taking place there by any means. We still have that negative divergence that is holding true at this particular point in time. So we'll see what takes place as the days progress. The percent of stocks above the 200-day moving average is still very, very high, 96.39% of the stocks in the S&P 500 are above the 200-day moving average. That is a multi-year high. Just looking back at this chart, you can see that. Actually, you know what? This is probably the all-time high for holding up at these levels, because that, it's darn near 100% of stocks are above the 200-day moving average. So just very, very bullish, but also from a contrarian standpoint, you can say, okay, things are overextended. And then you look at the other internals, you're like, okay, I can see why it'd be a time to just take a breath and take a pause and look for just high quality setups. Okay, here is the null. This is the new high, new lows. You can see here a negative divergence. We did get that weakness in the NDX today, but we're still, like I said, in very bullish context. So if this negative divergence plays out and we do see some weakness, it'd be easy to come fill some of these gaps if we get that, middle of the month pullback. The middle of the month, based on a seasonality perspective, I don't have that chart, but it falls right around December 20th to 25th. So be prepared for something like that. Now, what's very interesting about that is what I went ahead and said about this Bitcoin chart, right? So today's the 19th. What is 4 or 5 days away from the 19th, right? It's about the 25th. So, well, what is it? Not 25th from the 19th. No, sorry. We started dropping right here on the 16th, I believe it was. What's 5 days from the 16th? That's around the 21st is what I meant to say, which means to me, okay, if this little pattern here holds true, maybe we do see that or kind of a little pullback take place here following Bitcoin's lead and also seasonality. So I don't know. I'm just throwing out narratives, but it is things that I notice. Might as well pay attention if you can. Commodities, let's look at them. Oil, this is an important one for me because I want to press hard on energy. I do still see there's a big opportunity there, but I'm not quite convinced. So I did get out of my position, as I've already previously stated, with a small gain. It was about a 2% gain or so, or 1.5 or something like that. Not too bad. But 64 is that level of resistance. This could be just flagging out and we could have a nice solid breakout. Or this could be potentially rolling itself over here and then we break down to, 50 to 54 range, which would make sense from, just a technical standpoint where you get these kind of measured moves and you get these little impulses right here, pulled back, lower high, and then a little bit lower. And then we get the follow through move if it is continued to be bullish. So I'll keep an eye. If we start breaking above 64, I'm thinking I might be getting back into the energy sector and pressing it there and looking for individual stocks in the energy sector because we can find some high flyers, which we've done in the past. Now let's look at Bitcoin. I redrew this out. It was an ascending triangle. It created an all-time high. We saw some weakness. It rolled itself over and we saw that mini crash take place. By mini crash, 10%. It was pretty aggressive, but I mean, it's we've seen it before here, and this is even more smaller than the ones that we've seen. So it's holding right around the 50-day moving average. We'll continue to monitor this to see what plays out. I think if we start taking out 50,000, that might spell a little bit more trouble where we can see another 5,000 point decline probably pretty quickly. So this zone right here, 42.5 to 45,000, if we continue this breakdown, could be a very good opportunity to potentially place a good risk versus reward trade there as well. I do know of many people that are buying this specific dip right around this 50-day moving average. It was a pretty big red candle, and we saw some momentum right back up to the top. But like I said, it's just very hard to tell. And if we have somebody big whale sell out their big position, there's probably other whales out there that might be considering things, or there's nothing to take away from big policy changes potentially coming up. So you got to just be you just got to be very aggressive when it comes to certain things. Now I know that there's the hodlers and people that want to hold it to infinity and beyond. So I'm not talking to those people. I'm talking to more about just the people that want to get in and make some money on it, and then play with that volatility. And that's kind of my that's how I play. I played Ethereum, made a 15% move. It was crazy in just like a day or two. So that was great. Let's talk about the dollar. The dollar saw a lot of weakness today. I've been saying that the dollar seems like it sets up for a nice bounce around here. Today's candle makes me doubt that a little bit. What I do find interesting is this big move down in the dollar. The S&P 500 did not benefit from that, and neither did really gold or silver for that matter, which is interesting. But I talk more about the gold and stuff from an interest rate perspective in my previous video. So we'll continue to monitor this. This could be a head fake. We're right around the 61.8% retracement level here. So perhaps we do bounce, perhaps we don't. It's very, very hard to determine at this particular point in time. But right now as it stands, we flushed pretty hard through the 50 period moving average. So the dollar looks like it's going to continue this move lower, potentially even to where the year started, which is this black gray dashed line right here around just under 90. So we'll monitor it. We'll continue to see what goes on. All right, so let's just wrap this up with the conclusion. I went a little bit longer than I wanted to. The main thing that my eyes are on right now is we, for one, are overextended in still some areas, right? We saw a little bit of a down day today, and it didn't break any key technical bullish levels by any means. All I'm looking at is just overextensions, and what I need to feel more confident going long right now is I need to see some sort of pullback in the market, and then I could find these individual stocks or sectors that I want to press a little bit harder than usual. And when I go and press those sectors, what I'll probably end up doing is placing some sort of protective put position around my equity position. So if I buy 100 shares, I might buy one put contract at a strike price where my stop would be or something like that. So that's just a protective measure that I might be taking given the kind of just overextended market. But like I said, I feel more comfortable going long or multi-day swing trades with the market not at these specific levels. So I'm just being very patient. The last thing is, this is pretty interesting. The whole, looking into the future 5 days, 4 days, 3 days, whatever it is. So just monitor that, because that would be a very interesting indicator that I haven't heard anybody talk about. I guess I don't really listen, to too many things or too many people, but maybe this is a thing and I'm just saying it way late. But that's all I got for you on today's episode, everybody. Hope you guys all have a wonderful night.